Hey guys, good morning. It is Simon with Trade and Perform Coaching, and I just want to take a minute and show y'all the. I want to show y'all a way that should minimize stops and give you control of one bar, enter and exit. I am not saying this is the way everyone should do this. I'm just saying it's an idea to work with. So this is for the team members. I'm showing you the way I'm going to be doing it. And the reason I'm going to do it is because it lowers the number of stops that I take, controls my risk, and gives me the opportunity to have a large RR with a minimal risk size. Okay, so here's what this looks like. So first, before we get started, if you'll take a minute to read this legal notice. Okay, there we go. So I'm going to go to yesterday morning. So my first suggestion is you not trade this before 9:10 a.m. 9:10 a.m. That being said, I'll pick it up from 9 o'clock. If there's no news, you can just trade it at 9 o'clock. It has the most stop outs in the first 15 minutes of the day, hands down. So this is not recommended in that time frame, okay, or suggested. So first of all, I'm just going to circle and show you all the pattern, right? See as we're going up, so you all already know what we're looking for in short setups and long setups, top of the channel, bottom of the channel, all that good stuff. This is a 50-cent footprint. So here's 9 o'clock. That's 9 a.m. Okay. This is so what I'm looking for is once the down this, whether it's a purple, a blue, doesn't matter what color arrow it is, I'm always looking for the second bar to print. So on these purple bars, I want a second bar. On the no supply, no demand bars, I want the second bar. Let me show you why that's important. Okay, so you'll see here arrow down. I want to enter on this bar, and I want a 1 bar stop, and preferably you're taking it off the apex. Okay. So the idea is to scale on the next bar and then push the trade. Okay. So again, as you come up here, if I take out the high, second bar prints, I want to stop, and specifically I want to stop 1 point behind this bar. Okay, so this, usually that second bar, especially if it's a no supply, no demand on that 50 cent, is relatively small. In this case, here I'm going to make it big so everyone can see it. In this case, the entry would be here at 79. The stop is 86 plus a point, so it becomes a 7-point stop. This is called 8 points to keep it within the realm of opportunity. So you have two options to trade this. If you take 1 bar down, that's 79 to 74, approximately 5 points. Right? And you can either contribute that 5 points, which is what I would do, to, if you want to get the stretch, you contribute that 5 points to the net, right? You contribute that 5 points to the net, leave your 8-point stop, which becomes a net 3 points on the stop for the roll back to the downside, right? What it stops by doing this method, what it stops is taking a 1 bar entry on the algos, which we already know are good. I'm going to erase the lines. What it stops is this stuff right here. Okay, now you still get stops, right? But if you look at this chart, right, you would not be going, so what you'd be looking is going, oh, this is the first wave down, but nonetheless we'll look at it, and we'll pretend like we don't have any filters or any ability to tell when the trade is good or not. So this is entry 2, this is a stop, right? This is not a stop because it never printed a bar up. This was your first entry for a short, entry 1, entry 2, entry 3 if you go long is a stop here, right? This is not an entry, it's on the 3rd bar. This is not an entry, it's on the 1st bar. Coming down, you're coming down, you're coming down. The bar has to either have an arrow on my screen, a blue arrow, a pink arrow, or no supply, no demand, right? That's an entry, okay? If you think it's short for continuation, that's an entry. If you think it's long for continuation, that's an entry. Again, if you think it's short here, this is your entry. Just follow along with me. I'm not even going to try to figure out the broader market. This is an entry and a partial stop. This is an entry, and depending on how you scaled, this is a partial stop. If you get stopped on this, you can re-enter on this bar. Same process, right? Again, these stops are relatively small for the 50-cent process. The entries on this pink bar, scale, push. If you, for whatever reason, are shorting that impulse move, this is your short entry. Again, if you're pushing and you think it's short, no entry. Again, if you're pushing and you're looking, let's see, where was your entries? No entry, no entry, no entry. If for some reason you shorted down here off this impulse move, I don't know what to tell you on that. You're looking for the break of the swing, basically. This is valid. Again, you got your scale off and stopped on balance, or you took the money. Again, trap, entry on the no supply, no demand. Again, reversal bar, this is your entry. You should be trying to push your trailers, in my opinion, right? Push up. If you're looking for the short, again, if you were thinking, hey, we're going to continue lower, this is your entry. What you're going to notice is a repeating theme. Either the stop's relatively tight or it's going for 2 or 3 bars at least, right? So this would be an example of an entry and a stop. Why did it stop? Because it came back behind the bar completely, right? So as we're moving along, and again, this is on Monday. I'm going to do 2 days here so you can get the idea, right? So I'm combining, obviously, what I want is it down on the third wave. I want it in support, at resistance, outside the fourth channel, all that good stuff, right? So all I'm trying to point out is that this is not a trade, right? This is a stop if you're looking for the short. No trade over here, no trade over here. I would not trade the middle of the channel. No trade over here. This is all New York lunch. I wouldn't trade it anyways. Again, in New York lunch, this is a partial scale and a stop. I'm going through and showing to you, so you have to add the rest of the process to this, right? This is after New York lunch. This is an entry, right? This is after New York lunch. This is an entry. This is after New York lunch. This is an entry. Okay, and obviously I'm not firing on all these, as anyone who's been in the room knows. I'm looking to take the rest of my structure support. What I'm trying to show you is when you have the setup you're looking for, right? When you have the setup you're looking for, my strong suggestion is you wait for the algo to appear on the second bar. If you have a blue arrow, okay, if you have a blue arrow, wait for the second bar to enter the trade. It will, I promise you, it will cut down on your stops and increase your winners, right? So I'm just going to finish out this day, then I'm going to go do Tuesday. Okay, so again, stop. If I'm looking for the short, 1 bar stop, right? Short, balance, stopped, and I missed, in this case, I missed that rollover. That is okay with me, right? So the other way to do it, by the way, is if you get the second bar and you're super confident of the trade, right? If you miss that second bar, put your stop at the swing, but I don't want big stops. I want it to kind of click for me in a way that I can trade it. It's unfortunate that this roll down was missed, but if you'll look into sequencing of this thing, what releases is the second bar without it getting stopped. That's what gives the big releases. I would not have taken this all the way down on the channel. I just wouldn't, right? It does not mean don't try to take it off the high, apex traps, etc., etc. I'm just simply trying to show you that there's a way to take these right? Without getting crushed. And again, I'm putting no, this is 5 minutes to the close, right? I'm putting no special determination on it. So let's just go to the next day. Okay, let's go to 9 o'clock. Again, I suggest you can trade in the first half hour if you'd like to. I don't like to, right? Again, if I did it, it would be very simple. If I was going to trade in the first half hour, my entry would be on the second bar, and my stop would be 10 points. On this blue, on all of these, that it would be the same way. I would enter, I want the algo on the second bar, and my stop would be 10 points, right? So my entry process would look like this. So this is 9 o'clock. Algo on the second bar if you're going to take it to the top of the channel and you think you have momentum. Stop is actually less than 10 points on this, right? Again, no trade over here. Why? No algo on the second bar. It still lifts, right? If you're looking for the short, this is your entry. If you are looking for the short, there's really no entry here. You want to come off the turn. If you get a purple bar, the entry's on the second bar. Okay, I know those have a high win rate, but what I'm trying to prevent is the stuff. And on the second bar, you almost always get a second extension, which gives you enough if you have a 10-point stop, right? If you have a 10-point stop, it gave you at least 5 points, right? Which means on half size, you had a 5-point stop, which is manageable on the risk. Again, I strongly suggest you trade in accordance with where you think the market is going. Okay, so purple arrow down at the bottom of the channel. This is long. Again, you're going to get your stop, your trail, excuse me, and push, right? The idea is small stops, push the trailer. Okay, you're going to come through here. You're going to get scaled if you think that's short. And again, no one in the room is trading every single turn. It's not the goal of the trade, right? We're putting the rest of our tools to work where we think support resistance is, etc., etc. This is a flat out stop, right? This is long. This is long if you're looking for the continuation. This is short, right? And what you will start to notice is on the trades that work, they get really big extensions, right? What also stops happening is you don't get the series of big 1-bar stops, right? Because usually this bar is very big. It's like a 15-point stop, and this is sub 10 points on this trade, making it much easier to get to your 1-to-1 RR, right? Secondly, if you need the algo, so this would be a stop, but instead of stopping down here where you require approximately a 15-point stop, so if you entered here, and why you would short there is go long there is beyond me, but even if you did, that's a 26 to an 11, a 15 to 16 point stop if you put it 1 point behind. This is a 31 to 23, right? Basically 7 points keeps this trade intact versus 16. It's almost a 50% cut in the stop, right? So if it's a 7-point stop and you're getting a 4-point scale, it means you have 3 on net left after the trailer. And when it goes, your RR is huge. Okay, this is all yesterday, right? And the only time you're taking the second bar automatically on the arrows is when you get the blue or the pink, no supply, no demand. And again, where the stop is on this bar, so you still have to read the market, right? But if you're looking for the short here, which I don't know why you would, like you just get a big impulse move off the bottom, right? But if you did, here's your entry. Okay, let's erase this so you can see it clearly. So I'm going to add a point to each side. So let's call it 82. Let's call it 81 against 73. That's still an 8-point stop versus your normal 16-point stop, 15 to 16 points. It cuts the stop in half, right? Most of the time it gives you that additional bar, right? And it keeps you from the 1-bar stuffs where you take it multiple 16-point stops. Let's say you were shorting, right? The reason why this improves the process is because let's say you're shorting this right here, right? You're still not covering this because all this is 4 or 5 points, right? Right here, so you're like, I have 16 points of risk, I'm not going to cover for 4 or 5 points. So what that second bar does is allow us to turn the risk around to a sub 10-point stop, right? And get the extension down. So that's why this is important. You'll see all day long it really performed quite nicely, right? You can see it over and over again where it's giving you the bars, and that's what I'll be trading. Okay, thank you, and let's go have a great day, guys. I'll see you all later.